Yo, what is good? It is your boy Riding His TP back with another video. Yes, I told y'all the content is coming. I told you, I'm right now. I've been perfecting my craft. It's time now. First and foremost, man, I hope whoever's watching this is having a great day, morning, evening, whatever it is the time that you're watching this. As you could tell from the title, obviously, we're going to get into a little bit of gold solely because, I see a lot of people do this, but they make it hard on themselves, man. And there's a lack of logic in the trading community. I think we focus too much on indicators and a lot less on logic. And I'm going to show you how you can catch, not just, 50, 30, 20 pips, how you can catch real moves on gold, how you can catch long moves on gold, moves that pay the rent. You know what I'm saying? So, first off, please like, comment, share, subscribe, because the value is coming. The value is coming. I don't know if y'all like that intro I got there at the beginning, but yes, I'm launching something as well, something that I've been aspiring to do for a while. My little group called Market Mechanics. I chose that name because what I show you guys, what I'm going to be showing you guys is so proficient and versed in price delivery that you can apply it to not just Forex. You can apply it to stocks, whatever it is that you're trading, because it's truly price action. That's all I trade. No indicators, none of that. As you can tell, like I said, structure is king in the thumbnail. So this is gonna be really, and this can apply to anything. It's not just gold. I just picked gold because gold's popular and everybody's scared of this pair for some reason, but I'm gonna show you how simple it can really be right now. Before I get into anything, before I go look at the whatever it is over there, let's take a little trip back. There may be some new people on here, but obviously, right, when it comes to structure, right, obviously this is your general bullish structure indication, right? And trading is all anticipation. So once you get the signs of bullish structure, right, you can then anticipate. Simple, very, very simple. And as above, so below. Upside down, right? You get the signs of going lower, right? You can then anticipate, right? And that would be these would be your entry points, right? Very, very simple. Now, however, it is very easy to understand that. What people really lack, and I'm going to put a video up here in a second. This is really what's going on, and this is how the market, in my eyes, is represented, how it looks, right? It's very, very fractal. As you can see in this image I'm showing, every time frame has its own structure, right? Every single time frame has its own structure. I'm going to do a little more in-depth video on structure as far as what time frames to look at for what kind of trader you are, and this could probably be a trading plan type of video, but this is strictly just understanding structure and then how to really knock it down to where you want to be, like where you get to your entry part from weekly all the way down, right? So like I showed prior, now that's bullish structure and bear structure. Okay, now what you got to understand, like I said, is the fractalness, how it's a pattern within a pattern within a pattern. Okay, so here's a prime example, right? You've got to be able to understand the agenda of each time frame to know exactly what you should be doing right now, because a lot of you get lost in the time frames. You get lost. Okay, so let's take this bullish structure for example. Now, of course, it'll never be this picture perfect. Okay, but let's just say this is the weekly time frame that we're looking at. This black line represents the weekly time frame. Okay, now what I'm getting at really is what's going on within the weekly. Okay, like if you're getting an expansion during the weekly, more than likely the daily and the 4 hour are presenting higher highs and higher lows, right? Because it's a pattern within a pattern. It's very fractal geometry. Okay, so you're more than likely getting this within, right? And so what happens when the weekly begins to pull back, right? If you're getting a pullback or a reversal, right, more than likely you're getting a break of structure on the 4 hour, 1 hour. Okay, now why is this important to know? Because we know whether we're short term, long term, are we selling to buy or buying to sell? Are we accumulating to distribute, or are we distributing to accumulate? Very, very important to understand. Okay, so what do I mean by that? Like, let's take this example right here where we notice a break of structure on the daily, and we understand that that's a potential pullback on the weekly. Okay, that means I can sell. Now, once I get the signs, right, obviously, this is a break of structure, right, where you've got your higher low crushed and then the high maintains. Thus, you can then anticipate the expansion to the downside like this. You can then be in a shorting opportunity, right, down into, and ultimately when price, right, is back together again. That's the way I view it. When a pullback happens, obviously the time frames are not in agreement with each other, and they're not together right now. Whatever time frame is, this works with anything because it's all fractal, all the way down to the 1 second. It's the same thing over and over and over again. So what I mean by them getting back together, right, you can be a short-term seller until price proves otherwise, because remember, as above, so below. Once you get that nice move where this low maintains, right, high point, right, and then that's when you anticipate, right, because that's all trading is. You don't know what you don't know, but what you can do is back test. What you can do is prove things based on tendencies and the market, and it's all algorithmic. That's a whole different video, but that's literally how this works. This is all an algorithm. So if you can eliminate the emotion, right, and strictly trade on a plan, understanding just fundamentals and things like this, I mean, you can find success. Right? You don't need a MACD, you don't need a stochastic or whatever those are. You don't need them. Okay, but understand that every time frame has its own agenda. Okay, now how do I apply this to gold? Because gold literally respects structure to the T, to the absolute T. Okay, now here's a prime example of this. I already got it replayed because I want to go over this area and how I was prepared for these buys well before they were even happening, right? Even though this reversal period right here, this pullback period, lasted from August, I think, to around December. Yeah, August to about December. So it lasted for a good little while. But see, understanding the fractalness, I understood where we were and when it was time to truly buy, right? So I'm gonna go straight into that. Remember what I said prior, right? In expansion on the weekly, there's higher highs and higher lows on the daily. And so if there's a pullback going on a weekly, right, more than likely you've got a higher high, right, higher high, right, higher low, and then we make a lower high in here, right, and thus making us a seller, but temporarily. See, the reason why structure is so important, you can never marry a bias. You have to take what price gives you at all times. Okay, so I remember like all these times people were calling shorts all down in here and guessing in this region and guessing here, thinking we were going to die from here. You got to understand something. There's no reason for us to come, even if we came back, down in this level, right around in here, maybe, I would still be a buyer, right? Because structure is not giving me the proof to be a seller yet. Not at this point in time, okay? Now, I don't want to spend a year on the weekly, right? But I want to just take this. I want to go really slow. I want you to look at this. Notice this is a pullback motion. But when I drop one time frame, I then now see exactly what I'm just talking about, right? You see how we got more data. And so now, right, I can read this out to you. Higher high, higher low, right? We then struggle, make a higher high, thus then coming down. Now, this is a nugget, okay? What I'm about to show you, okay? This is a nugget. Structure is bodies. If you're new, if you're fresh, and you're still getting the hang of structure, a tip for you is to go to the line chart. This will then give you bodies only, and that's really where you're going to get the strength from. See, wicks are shadows, and so even though you see wicks, lower or whatever, the closure is what you want to focus on, right? And so the moment we got closure here, right, I'm not a full-on seller, but I can anticipate, right? I can anticipate, right? So something that I like to do, right, and don't take my word for this, but back test it, right? Go and back test it. Okay, so what I do with my Fibonacci, right? No, I don't line my 61.8 or my 62% rather in this scenario, 62. I don't line any of my percentages up with support and resistance. Basically, right, anything in between the 62% and the 88% is then my kill zone. Okay, this is my kill zone. Right, and like I said earlier, this is not just gold. You can go do this with whatever you want, okay? But this is my kill zone. I will take any type of trade, long as it makes sense within my 62% and 88%. Now, obviously, there's a little more sauce to that, but I can't give. That's too much, right? I want to keep my videos very, very simple and walk you guys along the way, because it's a lot more to trading than just this. But I want you to just give you a general idea of my process and give you guys some insight on how I view the market. Okay, so like I said, anything in the 88.6 and the 62%, I will then pay attention to, because this is my kill zone. Right now, right, I'm not gonna sit here and watch this all day, right? But notice the reaction I get right in here. If I minimize this zone, right, I get the best reaction in between my 70.2 and my 62%, aka that optimal trade entry, right? Right, we get the best opportunity in there. And so the moment that happens, the moment we get a confirmation, right? And by the way, a good confirmation for as far as reversals, right? You need one good candle on the left, right, the right, and then you need 4 candles, right, below. Okay, so that's good for me. And so at this point in time, I'm a seller on gold, but temporarily, right? I'm bullish metals as of right now. I'm not going back to bearish metals, right? Bullish metals, no matter what it is. Okay, but any time that I do get a nice reaction within, I'm anticipating the expansion to then land anywhere in between the -272 and the -62%. That is where I am anticipating to land in. That's where I want to see. Okay, so, and I'll notate some different things that catch my eye. Something along the lines of like this, right? This area appeals to me, right? And so as I'm a seller, I anticipate, and then really you can really just stack until you get that proof otherwise, right? And I'll get into what that proof is. As this plays out, you can see we keep failing at this high, and I could really reset the process again if I wanted to stack more entries. I could go here, right, from low to high, and then really anticipate anything in between the 62% and the 88%. In this case, a scenario, we did get something, I believe. This was a while ago. We actually didn't get anything in there, but still the 62%, we failed in here numerous times. And so I would just, obviously not on a daily time frame, but on a weekly, 4-hour, maybe even a 15 and 5, I'll find an entry, right? Those are my optimal entry time frames. Okay, but notice the reaction that we have, right? The area that I like, anything that piques my interest, right? And so price trades down. And so this is the most important part, right? After the expansion, I really want to pay attention to what price does at this point, right? And so as it plays along, right, I'm going to slow it down too, right? I'm going to read this lower high, right? Lower low, lower high, right? Now let me pause. Remember, don't let this misconstrue you. Turn the wicks off, right? And as you can see, we got a nice closure below this low, thus being a lower low. But what's powerful about this, what I like to see, is that higher high made after. Right? That's what I want to see. And so that's a significant break for me. That's a very, very significant motion in price for me, because it's the same thing. Remember, as above, so below. Remember, we got the break. Now I'm just in anticipating state. I'm in an anticipating state. This is not end all be all, but through back testing, this is something that I've proven can be very, very consistent. Okay, so literally the moment this candle prints and I show the signs of going lower, I then begin to measure again. Right, I measure again because I like the kill zone. The kill zone is preferable. I like to wait for this. Remember, trading is 80% waiting, right? 10% buying and 10% selling. Okay, so I wait for my kill zone. I'm so disciplined. I'm not going to chase. I don't have a feeling to chase. I understand that price is going to retrace. Right, and I'm going to get into another video too about the 4 stages, right, and how to identify those. That's definitely a great idea. I just thought of that. But right now, just putting everything together and understanding, back to what I was saying, the retracement is what I'm very good at, expansions, right, and understanding where we are. But something else significant is happening right now. Right, not only did we just get a break on the daily, right? Remember what I said earlier in that example of the break of structures and the real time frame and the real direction, right? But notice we got that full-on break of structure to the bullish upside, right, for gold. Not only that, the 4-hour, right, the 1 hour, right, so on and so forth. But now these time frames are back in alignment with the weekly. We are back in alignment with the weekly. Remember, the weekly is bullish. If every time frame is incongruent again, I'm telling you guys right now, hold it until the wheels fall off. That is not even trying to be funny. My first TP is here instantly because the pullback is over. In my mind, the pullback is over. Right, and so, I'm just going to go back to an intraday level to show you guys what I would be aiming at in here, right? And so what I like to do is, right, back when I filled the first time, I want to drop. And so it's not really going to be relevant to me until we've retraced 50% of the move. Right? I need to see 50% of this back at least. And then anything that really catches my eye or anything like that is what I will be looking to partake in and take a position. Right? Remember, I'm very, very patient. I remember this was NFP where we traded up and then we shot down like this during NFP. Yep, right here. And so I love the fast movement. Right? Volatility is everything because fast will not last. Right? So once we're in here, I'm then paying attention to what price does. And so some of you are probably saying, I don't really get what I'm supposed to look at in here. And here's the beauty of it. This is why structure is king. Even if you don't see something that entices you to take a position, remember, every time frame has its own agenda, right? And so if we are back in congruent or in alignment with the weekly, daily, or whatever, we're back in alignment, maybe the 5-minute and 15-minute can play a big part here now, right? I'm going to show you guys how to break this thing down, right? And so I've played it out too far already, but you get the gist, right? Trades down, lower low, lower high, lower low, right? Keep making that price action until ultimately a new high is made, right? At least right in here, you can consider this, right? And so I would expect these consecutive candles, I would consider an expansion on this time frame, thus measuring, right? And I can delete this and then redirect the thought process, right? 62% and 88%, my kill zone, right? And so that is what would make me want to take a position. Okay, and notice the move we get after it. Right, and then after that, it was really off to the races at that point. Right, even if if you waited, it did come back again. Right, but you would have never got your stop loss hit. Little patience. And if I back this all the way out, I'm just going to play this out to show you guys structure is truly king. Once they were all back in alignment, no matter how much we wicked up here, buying was the move. And notice how we literally obliterate the upside, like run through it like no other, because that was the real agenda. Okay, and so I hope this was super informative. I hope this made a lot of sense for you guys to really break down each time frame. I noticed there was not a single indicator on my screen. Learn to read price, because that's the true indicator. Candlesticks give you everything that you need. They give you everything that you need. Pay attention to closure, pay attention to structure, and really just have a process. Right, maybe my process was appealing to some of you guys, and maybe you want to test it out. Like I said, do not take my word for it. Go back test it. All in all, though, I do appreciate those that stay to the end. Like, comment, share, subscribe, and this is Rodney His TP signing out. Peace.